Hello, it is the 30th of June 2011, and welcome to today's Silver Log. And in this episode, we'll take a look at the silver and palladium quarterly charts. As this being the 30th of June, it is the end of today's quarter. Go over more on the average yearly silver chart, but the more we'll be comparing it or working within the Dow Jones average yearly charts. Let's get started with another one of these, comparing your purchasing power with fiat dollars and silver. This example will use postage stamps using 20 fiat dollar notes, how many you can get, and how many stamps you can get. These are US stamps with 2 ounces of silver. Once again, I'm basically using, for every 1 ounce of silver I'm basically going to be using 10 US dollars. That seems to be a good combination to use within here. And right now, the purchasing power is doing better again with silver. That's just no surprise. If you have any item you'd want to see on here, I need to know the prices and when the prices went up. But if you have anything you want to see, give me the link or the links needed where the prices are, and I can put it up on one of these future episodes. Let's go back now to the comparison of the average silver yearly chart. And I was stating if you got out of the market on the early part of February and back in on June the 30th, you'd be doing really good, which means it's a busy day today because you got to get all that silver that you sold. And you're going to get about the same as you got the last time, actually, even a little bit less. But you're doing really well in the long term because you've missed major collapses or a month or a period of time in the spring and early summer where the markets just don't do so well. They seem to do well from here to here because you make all this pattern of higher highs and all that sort of mumbo jumbo. Maybe this is going to make the market turn around and do very well. I don't usually like to do these types of stats too much and think, oh, for sure I'm going to go big with silver because this is when it normally goes higher. But if the trend remains, as long as the trend's active, then if it's working, then it's obviously working. Now, a lot of people like to think that the stock market and the the stock market and the silver market are trading together. Well, you would not want to get out of stocks here and back in here. No. When do you think you would want to get out of stocks and back in? If that's all you did once a year was get out once and then back in after the market crashes, when would that be? Well, the answer for getting out of the stock market would be somewhere around here, early September, and you would get out in late October, somewhere around in here. Now, you wouldn't want to get out of the silver market at this point because the silver market goes up big in September into early October. September is one of its best months, other than maybe January and February and December. But it's a really, really good month. So the stock market, this is where you would get out. Early September, like before the Lehman Brothers collapse of '08, and then get back out late October after all of the markets have crashed, or retraced anyway. You would have missed the 1929 crash, you would have missed the 1987 one, and you would have missed the 2008 one. And by doing so, your portfolio would look something like this if you got out every single year in early September and back in again in late October. You'd make a pattern here of higher highs, where here you'd make a pattern of lower lows. Here you'd barely get above this and almost above it again. Here you'd have a nice break above it, and well, you're already back over it again, making new all-time highs for yourself at approximately Dow 75,000. Congratulations. But that's really all I want to say about this. Let's now go on to the quarterly silver chart. Today being the 30th of June means the quarter is almost over. But we're going to have a red candle because of the fact that it's got to go up like another $2 in about 6 hours for it not to. So it's a down quarter. And it's the first down quarter since 2008. All of 2009 was up. All of 2010 was up. And the first quarter of 2011 was up. This trend line here is the one that I like the best. Well, I can't say I like it the best, but it's important. I want to cover the bottom in 2000 4-ish area with its first support level in here, and then whatever else I can connect within it. So I'd probably do something like this. This trend line connects the support and this little range area in here. And if I use a parallel trend line, what I need to do is connect it within at least this key high in here, which will do, and something like this would work out well. This resistance level came back as resistance, fell back to support after resistance, and after it finally broke away from this level, it didn't find resistance at this level. No. Instead, it broke through and it's finding support, ing, meaning it's not over yet. It still could break through. However, when you are finding support at a resistance uptrend line like this, that is very super duper strong. That doesn't mean that it's going to lift higher and go to the moon, but that's usually the type of things you look for that to be the case. We do have this previous support level roughly at around $20 an ounce. We have not tested it. We don't have to test it. After all, the Dow Jones did not test its 1,000, nor did gold when it had a major level. But with that being said, we've got one candle of a consolidation period, and that oftentimes that can be enough just to spark the rally, and again, moving back here and then finding your higher low, and you're moving off higher. After all, the last higher low is $8.46. In order for us to have another higher low, we need one of two things to happen. Either a decent price correction, we have not had that, or a decent sideways correction. Once again, that has not taken place. A decent price correction is something like this, this, or this. Side corrections are this, and this. And that would be a good example of a side correction, that last one that I just drew a line on. Because in here you're saying we need to have a correction. Well, this wasn't good enough, and as it was going sideways, yep, it corrected through time, so therefore the low is here. Then you made a higher low in here, lower low, same low, lower low, higher low, and it's just choppy lows. And now all of a sudden we've started to develop a pattern of higher highs and higher lows. This thing is really just starting to get going, more than likely, because it's really, what's the best word? Insane to say that we're still below the 1980 levels. So getting towards there and breaking through, there's still a lot of legs left, in my opinion, because of all of the manipulation or all of the suppression over many decades within the silver price. Now let's move it on to palladium. Now when silver had its big move up to 50, it came back down to 4, and then it's finally back to 50 now. Where palladium went from 350 down to 50, losing 7 times rather than that of about 12. 7 times is taken the high divided by the low. And it's found support, then came back up to this level. Basically what happened is it made a big high and a big low. And then after it made the big low, it found its way to the middle part of this range. And it took many years to break that range. 1982 is when it established the low. It didn't break resistance here until about 98. So that was about a decade and a half staying within this range. Now imagine if silver would have done something like this. That is, it goes up to 50, and then it falls back down to, say, the 1975 levels, which would be about $5 an ounce. Then comes back in here, and if this is 50, I'd have to say this is about 30 or so, 30. Then maybe back to 20, up to 30, back to 12, like 16 or something, back up to 30, back down to 20 something, and there's a breakout, breaking 50, and all of a sudden, if this is 3 times higher than this, so this would be about 150. Then 150 back down to about 40. And now today we'd be about 110 or something. That could have very easily happened. And if that were to have happened, what would people have been saying? That it would be manipulation if we were to even go back down to 40 or 50. Plain and simple. The prices were suppressed here, they were suppressed here, and it's manipulation. But it's been suppressed more within the silver. Not saying that's supposed to follow palladium. By no means that's what I'm trying to say. But I'm just showing another example that gold went from 800 and It's well above its highs. And I'm just trying to point out the manipulation within the silver market using a clear example like this. Now back to Palladium and its actual technical analysis. We had this resistance level here at about 175 or so. This was a level that was resistance on really 4 occasions if you count this in here. And now it's been support twice and a decent amount in here because twice on this occasion and alone it was support, so pretty much 3 times. And it's actually lifting off from that area very well. If we do some Fibonacci mathematics, what we'll first calculate is this high, which is 350, and this low, which is 50. The difference from 350 divided by 50, I don't need a calculator to do. I'll say it's 7. And if I take this to the power of 1.618, the difference of high to the low, which is 7. You can do this with any chart. You take the difference to the power of 1.618. You get the answer, and you multiply this by the low, which is 50. This would have given us a price objective towards 1165. 1165 is roughly somewhere around here. That's close. That's a pierce below that level. We could do the same thing today, although we really don't have to, because we'll get the exact same mathematics just by using simple math. The difference of 50 to about, the difference from 350 to about 1050, which is what this level's at, it's actually 1090. That's about a 3 times difference. 3 times from point A to point B. From point A here to point B here, that's going from 50 to 150. Again, a 3 times difference. So the retracement that happened from here to here was the same that happened from here to here. So if the price objective for this one was 1165, then the price objective for a new one is 3500. There's a long ways to go for this to be the case because it still has to break the previous highs from 2000 for you even to say it. But you know that's going to be the number anyway as it's breaking higher, so you might as well know that level now. Let's do some more mathematics on the current time frame. We already know it's bullish to find support at previous resistance, but it's been a long way from this support level because it had a major successful test. So let's take a look at some exponential Fibonacci levels. What we want to find out is the 61.8% number from this high and this low. We know the high is about 1091. We'll say 1091. And the low is about 150. So we divide this by 150 to get a level, which is 7.27. What we'll do is we'll put this to the power of 0.618. For Fibonacci, either needs 618 or 382. We'll do 618 because this gives us the higher one. 3.4. Again, we'll times this by the low and we'll get the Fibonacci level, which happens to be 511. Let's draw a line in or around 511 and do some Fibonacci analysis, which would be it's pretty much this line in here. It's this, although I'll put another one in, but it's pretty much this line here. Therefore, for the selling that occurred from 2000 to 2003-ish area, for that to be a successful selling retracement, it needs to stay below this level. It goes below here, it has its move, and it finds resistance where it's supposed to. And when I say supposed to, for Fibonacci to do what it's supposed to do, or where it's a find resistance, or for the probability odds to do what probability odds state. And after it found resistance, it came pretty much right back down to the previous lows. Now the difference in here, when it came from here to here, do you think it found support at the 61.8? Yes, it did. But the last time it found resistance, it found a higher low. And that's what I state. When you come up here, you find resistance where you were supposed to here, you make a higher low, you increase the chances of breaking it. So here the chances were higher, although it didn't happen, and in here, even here, and finally it broke it. Now, it didn't find a higher low. Thus, the Fibonacci from here to here meant for this selling to be successful, it needed to stay somewhere below here. Well, that didn't happen, so this has already been a failure. But now, since this has occurred, it's gotten above this Fibonacci line. Since went above it, it's had a big candle break above it, which is this one in here, and now two sideways consolidation candles. This is enough to confirm that this is a confirmed breakout. What this means to me, for what I know for Fibonacci, is that the likelihood of testing this previous high is almost guaranteed. Because of this, this is its next price objective. Once you get there, then that changes everything. That totally changes everything again. But what you would expect to happen is maybe find resistance at this level and find support at a previous higher level back in here, and then break that level again. We use that same analogy for silver because I've talked about that one for so many of occasions. We'll get rid of all these different lines in here because I've talked about the Fibonacci from the $50 high and the $4 low. From here to here. That Fibonacci level will take 50. It's actually 12.5. 50 divided by 4 is 12.5. To the power of 0.618. Multiply this by 4, which was 19. Therefore, the Fibonacci level of 19 was somewhere even a little higher than this. Well, it's, yeah, right in here. So when you came up to this level, you found some resistance where you were supposed to. You broke above it, which you found support here, and then the chances are increased that you break it out. Boom. There's your confirmation in here. The confirmation that you're going to 50. That's what that confirmation was. It hit. So that's already said and done. That confirmation's over with. Now what's next? Well, you've pulled back since then. So now what we know is that going up here, plain and simple, increases the chances that you take that level out. Thank you for watching and have yourself a magnificent day. Bye-bye.